you want to have a flexible basket. That's the economic theory. Let me give you the political reality, how it's working for you all. Anything in that basket whose price is going up, they simply take it out of the basket. Okay? And anything whose price is going down, it's a bigger part of the basket now. So magically, we're the only country in the world that has no inflation. Look, we know it's so out of touch with reality. We know that inflation's in the pipeline. It's everywhere you look. It's even here, except we try to measure it and pretend that we have no inflation, yet we know that we do. Now, think about this. Even Japan is going to add on to that inflationary environment. So, to me, this really is a changer as well. Now, the inflation that does come is probably even worse than anyone realizes. So, this is going to really add to the already inflation problem we have. So, that's the second impact that I think is going to be a pretty dramatic impact. Now, the third and final screen that we look at is, did it change anything with the global economy? Boy, this one's the big one. I know it did. It changed things in a big, big way, these events in Japan. But this might surprise you. I actually have a somewhat optimistic view of how this is going to work out. I mean, I'm guilty as charged. I am a glass half full kind of guy. I don't think it's going to be as bad as most people think. And I actually think the upside could be even better. So the reason I don't think it, so think about this. The downside, not as bad. For the global economy, the upside, even better. Let me show you how I get there. I went back to the first of the year, and I decided to do a little research project. I looked at every single firm on Wall Street. I looked at every single one of their global economic outlook reports. Do you know what I found? Not one. Not one single firm on Wall Street thought that Japan was going to be an engine of growth in the global economy in 2011. Not one. Not one firm was looking for Japan to help grow the global economy. In fact, the consensus of all the firms on Wall Street was that Japan would actually detract from the global economy in 2011. So fast forward to where we are today, Japan is detracting from the global economy. How does that change anything? We weren't looking for them to do anything, and they're not doing anything. It doesn't change the global economy. I have a little rule that I use in investing. You might find it interesting. It works very well for me. It might work for you. It goes like this. If you're not the lead story on the way up, you don't get to be the lead story on the way down. It's the way investing works. In other words, if what happened in Japan instead happened in Brazil, I'd be scared to death today. Oh, by the way, why would that be? Well, Brazil was part of everyone's global economic growth story. Brazil's part of the story on the way up. If you're part of the story on the way up, you get to be the lead story on the way down. Japan was not only was it not part of the story, it wasn't even mentioned as part of the story. Now, yes, I get it. I know this is horrible for Japan, but in terms of what is it going to do to the overall global economy, it will not nearly be as bad as everyone wants you to think. Now, as I explain this, I do get some pullback from people that say, oh, you don't understand the supply chain disruptions in Japan. You're right, I don't. Because they're talking about, supply chain disruptions and the whole global economy is going to collapse. See, I didn't realize that every company in Japan that does business around the world, they have a complete 100% monopoly with everyone they do business with. In other words, no one does business with anyone else but just them. And by the way, those companies have no competitors anywhere. See, I didn't know that. I just sort of thought that, they all had competitors, and, if they had supply chain disruptions, someone else was going to step up and steal the business with them. And I just thought, clients maybe bought things from more than one company. And, if that company can't meet the order, maybe they might, I don't know, buy it from one of the competitors. But I'm sure I'm wrong, and they're right. This is not going to be as negative for the global economy as they want you to think. Yes, it's negative for Japan, but it's not going to have this unbelievable negative impact on the overall global economy. So think of it like the downside, not being quite as bad, but watch this. I think the real story is how strong the upside potentially could be. I met with a group of our institutional clients 2 weeks ago, and it was somewhat of a heated debate because they didn't agree with me. And finally, to get them to understand what I was saying, I said, look, let me help you with this. Japan is about to become an emerging market economy. Finally, they understood. Japan is about to become an emerging market economy. Let me explain that to you. On Wall Street, we have two benchmarks. We have a benchmark that we look at developed market economies and emerging market economies. If you are a developed market economy, that would be countries like Canada or France. Your benchmark is 3%. In other words, your economy better grow at 3% or we're not interested in you. If you are an emerging market economy, that benchmark goes up to 7%. In other words, if you can't grow at 7%, we're not interested in you. Watch what's about to happen. Old, boring Japan, a developed market, is about to grow like an emerging market. Japan will be growing at 6 to 7% by the end of this year. If it doesn't happen by the end of this year, it'll happen by the beginning of next year. And the issue is, it's not in anyone's forecast. No one saw that coming. And the magnitude of it is going to be unprecedented because Japan is the third largest economy in the world. Think about this. Look, one of the things that's kind of frustrating on Wall Street is we're always expected to find the next big thing, okay? The current big thing is never big enough for anyone. You got to find the next big thing. Oh, by the way, the current theory of the next big thing is Vietnam. If you haven't heard that yet, here's how the theory goes. China took all the jobs from the United States, so that means Vietnam's going to take all the jobs from China. That's sort of the theory of the next big thing. Now, it's kind of an interesting theory. I don't know if it's going to work or not, but it doesn't matter. That's the theory. So the Vietnamese economy went up 15%, and son of a gun, it didn't do anything to the global economy. Like, how is that possible? Like, if they're like the next big thing and they're at about 15%, how comes the global economy didn't move? Well, it's because Vietnam is actually, it's kind of teeny tiny from a global economic perspective. I would never say something flippant like it's a rounding error, but it sort of looks like a rounding error. You know, it's like $200 billion. You know, I mean, no matter what they could grow at 115%, it wouldn't change anything. It's $200 billion. Japan is $4.3 trillion. That's trillion with a T, growing like one of these young emerging market economies. It's not in anyone's forecast. Yet, there's risk to the global economy. Guess what? All the risk is to the upside. It's not to the downside. It does change everything. It's going to make it better, not worse. The downside, not quite as bad as everyone thinks. And I think the upside, absolutely positively better than maybe the rosiest of all forecasts. So to me, this is clearly the biggest external event in the last decade. Not because the amount of property loss or the loss of life. It changes the core of investing. Changes interest rates, lower longer, higher faster. Changes the inflation picture, makes it even worse than what anyone thought, because now even Japan is going to have inflation. And maybe the biggest impact is it changes the global economy. But it doesn't make it worse. It actually makes it better. So with that backdrop, we step back and say, okay, what's the best way to make money? I mean, in that environment, if we have to figure out how can we make money, and I'm not talking just make money over the next 6 months or 1 year. How can we make money over the next 4 to 5 years? Because these things don't go away quickly. I have a strategy that I think both benefits from the booming global economy and it's going to benefit from higher inflation. So it's sort of like an inflation hedge, and it's going to play off a strong global economy at the same time. And it actually is an investment that's in the alternative investing space. And I know for a lot of investors, they think, oh my gosh, that's so risky. Well, it's just because it isn't stocks and bonds doesn't mean it's any more risky than anything else. But the alternative investment that I think is going to be one of the best investments over the next couple of years is actually commodities. Even with the sell-off today, commodities are going to have such a great run. And I don't mean all commodities. I have two favorites. Two favorites in a basket. Actually, you could put commodities in 4 different baskets, and there's 2 baskets that I think are uniquely positioned. Basket number 1 that I love is the soft agricultural commodities. So think corn, wheat, soybean, cattle, livestock. That's going to be phenomenal over the next couple of years. Basket number 2 that I like just as much is the energy-based commodities. But in this case, I want you to think everything that's old and dirty, okay? Nothing clean and green. Not that I don't support it, you're just not making any money off it. And you can't get it done fast enough because the global economy is booming right now today. You've got no time to get clean and green. It's old traditional energy that's going to outperform in that environment. So to me, when I say commodities, I want you to think sort of the food commodities and the traditional energy-based commodities. Now, that's where I want to be. Let me show you why I know that's going to be such a great investment. There's 2 parts to this investment thesis. Both of them are political. It's not partisan politics, but it's political. One is a domestic political issue, and the other is an international political issue. When you put these 2 together, you realize why commodities is going to be one of the best investments out there. Here's the domestic political issue. I don't think we can fix the budget deficit in the short run. I don't think we can. See, despite popular belief, our budget deficit wasn't created in the last 2 years. It was created in the last 20 years. Here's why that's important. Whatever it takes 20 years to create, you don't get to fix in 4 to 5 weeks. The problems have been with us for a while. They're very complicated to fix. I mean, we'll fix them. It's a great country. I know we're going to fix them, but it's going to take time. I did something kind of interesting. I don't know if any of you looked at the details of this. I looked at both political parties' plan to balance the budget. Okay? It's kind of fascinating. The majority of the cuts from both political parties ended up falling in years 8, 9, and 10. You all know they're planning to resign in year 7, right? So they don't want to be, look, I mean, my point is there's no silver bullet. There's no easy way to fix this. It's going to be a tough issue. So my point is we'll eventually get it right. It's going to take us a couple of years. So my view is this budget deficit is going to be with us for a while. Watch what that does to commodities. If the budget deficit stays high, the U.S. dollar has to stay low. I don't care how much you want the dollar to go up. It can't go up as long as you have a big budget deficit. So, budget deficit high, dollar has to be low, commodity prices have to be high. They're all priced in dollars. Every single commodity is dollar denominated. It's not going to change. Every single commodity. You can talk bad about the dollar all you want, but to replace the dollar, you've got to find some place to send it. There's no place to send it. You got to replace it with another major industrialized country. You really only have 2 choices. It could be Japan. Oh, that one's not going to work. You know, they've done nothing for 20 years. They're not going to be the currency of the world. Or how about the euro? Well, that's an interesting idea. So, like, who's behind the euro? Well, that'd be 25 countries that hate each other. So, I'm not sure that that's like a really good plan. So, you can talk about leaving the dollar all you want. There's no place to go to. So, this is a really, really simple concept. Think about it. As long as the budget deficit stays high, and I got confidence it's going to happen, the dollar has to stay low, commodity prices will stay high. That's very bullish for commodity investing. So, I think I have the pricing piece of it correct. Now, the second political issue is really more international. And it's about what's going on in Libya today. It's about what happened in Egypt a month ago. And I'm going to show you that this is not a problem for the Middle East. That's what the media is saying. We have a crisis in the Middle East. No, we don't. We have a crisis in every emerging market economy. I can show you that what's going on in Egypt and Libya today is the exact same problem Mexico has. It's the exact same problem Poland has. It's the exact same problem in China and India. Every single emerging market, every one without exception, has the exact same problem. Now, the difference is they don't have it quite to the same magnitude as it's going on in Egypt and Libya. But here's the problem every emerging market is facing today. They have the haves and the have-nots. That's their problem. You might be saying, wait a minute, so do we. We got the haves and the have-nots. Except in this country, here's how it works. The people that have all the money, they don't have to look at the people that have no money. And the people that have no money, they never get to see the people that have all the money. Did you know how we pull that off? In between, we put the largest middle class in the entire world. That's right. The United States of America has the largest middle class in the world. That's why the system works. You can have the haves and the have-nots if everyone focuses on the middle class. You don't focus on the extremes. Go to Egypt. Let me tell you what you will find. You will find the people with all the money, the people that have no money, and nothing in between. There is no middle class. So you know what they put in between? They put the military in between. Now that is a formula for disaster. And that's exactly what it's been. Go to Libya. It's the exact same extreme. The people with all the money, the people with no money, no middle class, and the military goes in between. Formula for disaster. Now look, let me show you what's going to happen. Whether you despise these dictators or not, I don't want to go there. I want you to understand one thing about them. They are not stupid people. They may be bad people, but they're not stupid. You don't get to run a country being, well, that's a bad example, isn't it? No, I didn't mean it that way. It's just, you're not really stupid. So I'm just saying, you may not like them, but the fact of the matter is this. They knew they had to create a middle class. Okay? So they knew it. And they were planning on creating a middle class sometime in the next 50 years. Now they want to do it in the next 50 days. Think about what just happened. No one realizes it. We just had a wake-up call for every emerging market country in the entire world. Not Middle East, the whole world. Because every country is saying, we cannot afford to have this play out in our country like it did in Egypt or like it is in Libya. We have got to get a middle class, and we've got to do it now. Here's what I discovered. They have a teeny tiny problem before they get to have a middle class. Just a little problem. Most of their people are below poverty. So it's one thing to say, hey, let's have a middle class. That's kind of cool. Except that everyone's below poverty. So you sort of got to get people above poverty before you get to have a middle class. Watch this trend that's about to develop. It will be unprecedented for commodities. Within 5 years, 2 billion people go from below poverty to above poverty. 2 billion people. Now, if you're not demographic junkies, that's okay. Let me give you a quick perspective. I know you all heard of the baby boomers, okay? Arguably the most important demographic trend in the United States, and maybe the one that had the greatest investment ramifications of any demographic trend ever, inside or outside the United States. The baby boomers were 76 million strong. 76 million. I found 2 billion. This will be the largest demographic shift that's ever been recorded in the entire history of mankind. Now, here's why that's important to commodities. If you believe in history, like I believe in history, I think history is the greatest teacher, I know exactly what these people are going to do, because history already told me exactly what they're going to do. Two attributes change first when you go from below poverty to above poverty. First thing you change the quality and the quantity of the food you eat. They are so sick and tired of eating beans and rice. Are you kidding me? They want to eat like you all ate tonight. They want the protein. They want the meat. They want the fish. That's exactly what's going to happen. 2 billion people eating more and eating better. Here's the second attribute that changes. They want to change their mode of transportation. They are so sick and tired of walking everywhere. Come on. They want to take public transportation every once in a while. Or they want to save up their money and buy a moped. 2 billion people improving their mode of transportation. 2 billion people eating more and eating better. Look, this is a great, great investment opportunity because it benefits from both these political trends. High budget deficit means low dollar, means high commodity prices, and then we're going to have 2 billion people eating more, eating better, improving their mode of transportation. Think about this strategy this way. What we really want to do is we want to invest in feeding the world and fueling the world. Feed the world, fuel the world. Not just over the next year, but over the next 4 to 5 years. That strategy benefits not just from a strong global economy, but that strategy also benefits from inflation that we know is in the pipeline, and we know it's coming, and we think commodities are probably the single best inflation hedge of anything you could do for your portfolio to protect yourself when that comes. Let me end where I began. Look at the world a little bit differently. Instead of thinking about things outside as being noise, think about Japan as being the most important thing externally that's going to impact your investments in the last decade. Interest rates lower longer, higher faster. More inflation than anyone thought. The global economy doesn't get weaker, it actually gets stronger. In that environment, where's the single best opportunity? It's commodities, 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 and especially the soft agricultural commodities, the energy-based commodities, because it gives us the opportunity to invest by feeding the world and fueling the world at the same time. That, I think, is the single best opportunity that's out there. So with that, let me pause. I'll take a breath, and we can open it up to, can we open it to questions? If anyone has questions on anything, yes, ma'am, please. Great question. Did everyone hear it? The question was, how are they going to get 2 billion people from below poverty to above poverty? Awesome question. One answer. Jobs, 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 and jobs. It's the way it works. The simplest thing to do with the country's economy is to get people from below poverty to above poverty, because it's all about jobs. And we know where the job growth is going to be. It's in these emerging market countries where the poverty is. Now, why are the jobs going there? It's because that's where the labor is the cheapest. So that's where companies can make the most money. So it's not really that difficult. I don't mean to make it sound so easy, but it's a lot easier to get someone to go from below poverty to above poverty, because you just got to give them any kind of a job and you can do that. The bigger challenge, I will add the second part to your question, would be how do you get people from above poverty to the middle class? That answer is education. That'll be the bigger challenge. I know they'll meet the challenge of getting people from below poverty to above poverty, because companies will pour money in there, because companies, believe it or not, they really love to make money. And the easiest way to make money is pay someone 80 cents an hour instead of $18 an hour. So I know the jobs are going to be there, so I know they're going to go from below poverty to above poverty. I'm not so sure that they're going to be as successful creating a middle class, because you only can create a middle class with an educated and highly skilled and trained workforce. It's education, education, education. That will be their bigger challenge. So I think they'll get Part A done, because I think that companies around the world will throw money to make the jobs happen, but I don't think creating the middle class will be quite as easy as they think. Yes, sir, in the back.
in the next 10 years, baby boomers will be liquidating their illiquid investments and financial